PantheonAI presents Markets Steady, Skechers acquired, Nvidia shines, Tariff twist, Warren Buffett retires. Welcome everyone to the PAI Morning Briefing.
Good morning, Host A, and good morning to all our listeners out there.
It's May 5th, 2025, and we've got quite a bit to unpack today.
Absolutely. Markets, news, sector trends, it's all happening.
Exactly. We'll dive into some expert insights too, hopefully help everyone navigate these, dynamic times.
Sounds like a plan. Where should we start?
Let's kick things off with a quick market overview. We're seeing modest gains across the board this morning.
Okay, modest gains. Like how modest?
Well, the S&P 500 closed right around 5,669, up about 0.24%. So you're right, not dramatic, but definitely steady.
Steady is good. What about the Dow?
The Dow Jones saw a bit more of a bump, ending near 41,385. That's up approximately 0.51%.
Okay, stronger move there. And the Nasdaq?
Nasdaq wasn't far behind, closing near 17,897 with a gain of around 0.45%.
So the big three are all in positive territory. How about the smaller caps, the Russell 2000?
Good question. The Russell 2000 is actually posting a slightly better gain, up around 0.64%, sitting at about 2016.
Interesting. So small caps leading the pack slightly today. What about crypto? Any wild swings there?
Not really, no. Bitcoin's trading around 93,948, down just a tiny bit, like 0.37%. And Ethereum is right near 1807, with a negligible decline of about 0.05%.
Okay, so crypto is pretty stable. Traditional markets showing slight upside, crypto just chilling.
Exactly. It suggests a relatively stable environment overall. Equities have a little momentum, but crypto's just hanging out.
All right, so what's the takeaway from all these numbers? What does it mean?
At its core, it feels like the markets are balancing caution with optimism. We're not seeing huge swings, and investor sentiment seems pretty persistent.
Persistent? Despite everything going on?
Yeah, I think so. Maybe it's influenced by global economy trends, how people feel about fiscal policy, and honestly, the steady stream of earnings reports coming from the big players.
So for investors, how does that feel? Like smooth sailing?
It can feel like sailing in relative calm, yes. But you still have to navigate those occasional gusts of wind, right? If you can do that, you might just get to your destination with your portfolio intact.
Okay, I like that analogy. Sailing in calm waters, but stay ready for a gust. Let's dive deeper into those trends you mentioned.
Definitely. Many observers are bracing for a period where resilience is key. We might see moderate gains for a while, but there will be moments of volatility.
Volatility triggered by what?
Could be sector-specific news or bigger macroeconomic cues. Like, investors are really watching government policy changes, especially tariffs and trade considerations.
Tariffs. That's been a big topic. How could that affect U.S. companies?
Well, it's interesting. Some analysts are suggesting that tariffs might, counterintuitively, act as a time stimulus for domestic production and earnings, which could actually buoy the market a bit.
Wait, tariffs helping? That goes against what you usually hear, right?
It does, doesn't it? It's a fascinating perspective. It's not just policy, though. American companies are also positioning themselves to handle supply chain disruptions and changing consumer tastes.
How are they doing that?
Through things like strategic acquisitions or repositioning in niche markets. There's a clear adaptive strategy happening. And speaking of strategy and big news, we have to talk about Skechers and Nvidia.
Oh yeah, Skechers, that news was everywhere this week.
It really was. The key headline confirms Skechers is being acquired by 3G Capital in a take-private deal.
A take-private deal by 3G Capital. That's big. What's the price tag?
Market chatter puts the deal value at about $63 per share. That's a pretty impressive offer, representing a 30% premium to its current public valuation.
Wow! 30% premium. That explains why the stock reportedly soared by 25% on the news.
But here's the twist, and this is why it appeared in multiple versions. Just last week, Skechers actually faced disappointment because they missed expectations and withdrew their full-year outlook, partly due to rising tariff concerns.
Whoa. So 1 week it's down because of tariffs and missed numbers? The next week it's soaring because of a buyout? That's quite the whiplash.
It really is. And it tells us a lot about how companies are adjusting their strategies in uncertain times. When a major player like 3G steps in with a substantial bid, it points to a broader trend of consolidation.
I can see investors having mixed feelings about that.
Totally. On one hand, a big acquisition can be exciting. It could streamline operations and unlock long-term value. But on the other hand, that recent volatility and missed expectations raise questions about the fundamentals.
Yeah, you're left asking, is this a turnaround story? Or just a temporary bump from the buyout deal masking underlying issues?
Exactly. It leaves the market wondering. Okay, shifting gears to tech. The earnings season narrative has been pretty consistent.
Right. Headlines like Nvidia and these other tech stocks look like winners.
That's the one. What's interesting there is the sense of relief from analysts. Despite some initial jitters, major tech companies are holding steady, especially when it comes to big budgets for AI initiatives.
AI is definitely the buzzword. Tech has been the engine for market optimism for a while now.
It has. And with companies like Nvidia continuing to push the boundaries in computing and building the framework for digital transformation, it's not surprising investor sentiment remains buoyant.
But you gotta keep an eye out, right? For overvaluation or sudden regulatory shifts?
Absolutely. Seasoned investors are always watching for those signs. And then there's that intriguing commentary on tariffs we touched on earlier.
The one suggesting tariffs might boost asterisk U.S. companies in the stock market?
That perspective is fascinating, because it really does go against the traditional view that tariffs are just burdens. But some experts argue that if tariffs lead to a shift towards domestic production, U.S. companies could become more competitive locally.
So friction in global supply chains creates opportunity at home?
Precisely. While global chains might face headwinds, homegrown industries could step up to fill the gap. It's that market paradox again. A challenge on one front can be a catalyst on another.
It really makes you think differently about these things. Okay, let's shift to a more detailed sector analysis. How do these narratives break down by industry?
All right, starting with tech. Companies like Nvidia are cementing their positions as powerhouses. Their investment in AI, data processing, visual computing, it shows this isn't just a trend, it's the foundation for future growth.
Right, the bedrock.
Exactly. Now, while earnings are still delivering positive surprises, there is that subtle undercurrent of caution we mentioned. Tech giants are being careful with forward guidance, reminding everyone about potential headwinds like regulatory scrutiny and competition.
Makes sense. They're flying high, but they know there are risks. How about the energy sector?
Energy is complex right now. Global dynamics are always evolving. Investors are watching oil prices, renewable energy targets, and geopolitical tensions.
So traditional energy companies balancing legacy operations with the shift to green energy?
That's it. It's a mix of traditional allure and modern dynamism. It reminds us that while fossil fuels powered economies for a century, renewable innovations are happening now.
Happening right under our nose. Good point. And finance?
Finance is on a steady course. The stability in the major indexes suggests institutions are weathering recent uncertainties pretty well. Banks and firms are cautiously optimistic.
Cautiously optimistic? And investing in technology?
Definitely. They're hedging predictions against global uncertainty, but also investing heavily in tech to stay competitive. Digitization is a huge factor.
So blending traditional finance with digital transformation. Risk management, customer service, tech prowess, all becoming inseparable?
Exactly. It's like watching your favorite sitcom evolve. Familiar characters, but new surprises keep you coming back.
Haha, I like that. A sitcom of finance. So how do these sector stories fit into the global picture?
They weave into a larger tapestry of international trade, economic policy, and investor psychology. The tariff talks, for instance, show that globalization isn't a simple thing.
Not always a double-edged sword.
Right. Supply chains might stumble due to policy, but those same changes can create opportunities for domestic industries. Whether it's tech investments, market repositioning, or deals like Skechers, companies are constantly adapting.
So for global investors, the key is staying nimble?
Absolutely. Maintain diversified portfolios. Be ready to capitalize on shifts wherever they happen. Emerging markets, domestic production, whatever defies conventional wisdom.
It sounds incredibly complex, this interplay between domestic policy, sector strategies, and global trends.
It really is. In a world where uncertainty seems to reign, how do investors position themselves? Is there a secret formula? Or is it just the unpredictable dance of supply, demand, and policy?
Those are the million-dollar questions, aren't they? The ones that keep conversations lively, especially around here at PantheonAI.
Speaking of lively, let's add a touch of humor. You know, sometimes I compare market fluctuations to my morning coffee habits.
Oh, tell me more.
One day, you need a strong espresso shot for energy. Another day, you need a decaf calm to manage the jitters. And sometimes, even the decaf leaves you a bit too wired.
Haha, I can relate to that.
It's kind of like the market, right? Always giving you just the right blend of energy and caution. And isn't that what makes investing such an adventure? You never quite know if you'll get a robust, full-bodied portfolio boost or a brew that's just a little too bitter.
That's a great way to put it. It is an adventure. Let's circle back to Skechers for a second, because that story really is a microcosm of these trends.
It really is. On one hand, you have the acquisition announcement at $63 a share. That's a beacon of confidence for many investors. Someone with deep pockets believes in the brand and is willing to pay a premium.
Right. Shows a belief in the long-term value.
But on the flip side, you have those reports of the stock tumbling just before, due to tariff concerns and underwhelming earnings. This dichotomy makes you ask, was the market overreacting to short-term setbacks?
And the buyout is the correction, a more rational long-term valuation?
Potentially. This pattern isn't new, really. We've seen it before, where short-term volatility from external factors, political tension, tariffs, supply chain issues, paves the way for strategic realignments.
Realignment that can benefit companies in the long run.
Exactly. In Skechers' case, the 3G acquisition could be the catalyst for a restructuring and revitalization. It's a classic market metamorphosis story, one worth watching.
Definitely. And parallel to that, tech is still grabbing headlines, with Nvidia and others winning this earnings season.
The underlying theme there is resilience. Despite earlier skepticism, these companies are meeting, often exceeding, expectations. The relief from analysts is palpable.
A collective sigh of relief that AI initiatives and tech innovation are continuing full steam ahead.
Right? Imagine a high-stakes poker game where you think you have a weak hand, but then you realize your cards are way better than you expected. That's the sentiment on Wall Street for tech right now.
Haha, another good analogy. So even if the market feels calm, the underlying tech acceleration is still powerful.
Precisely. And let's not forget that intriguing piece on tariffs again. The idea that they might be a boon for U.S. companies.
Yeah, filling the void if international supply chains are disturbed.
It challenges the conventional view that tariffs are asterisk only, a burden. What we're seeing is more nuanced. Short-term pain could translate to long-term gain. There's almost a if you can't beat 'em, join 'em mentality.
Companies are reorganizing, optimizing supply chains, and finding unexpected efficiencies.
Often, yes. This presents both an opportunity and a challenge for investors. You need to figure out which companies are asterisk truly tadalic positioned to benefit from these policy shifts versus those just caught in the crossfire.
Discernment is key. Okay, moving on from headlines, let's get back to sector specifics with a closer look.
In technology, beyond the exciting headlines, the focus on AI investment is huge. Companies are channeling substantial budgets into R&D. We're watching the next wave of innovation unfold.
It's not just smarter devices, it's smarter ways of doing business.
Right, this tech transformation is set to be the backbone of economic growth. Any long-term investor needs to pay attention.
Totally agree. In the energy arena, the dialogue about balancing fossil fuels with renewables continues.
Energy firms are reinventing themselves, not just sticking to old formulas, but exploring new avenues that redefine their models. It's a reckoning for the industry.
Standing at the threshold of a greener future, investors should watch companies that are truly pivoting to renewables and integrating sustainable practices, not just greenwashing.
Precisely. And finance is also undergoing its own transformation. Interest rates, policies, regulations, it's all in flux, forcing firms to innovate quickly.
Digitization seems like a massive part of that.
It is. Firms embracing technology to serve customers better are not only improving satisfaction, but also positioning themselves to navigate uncertainty. It's that blend of tradition and innovation again.
Balancing tried and true practices with cutting-edge adaptations. It really is a microcosm of the broader market.
Exactly. And when we take a broader view, assessing global market implications, what happens domestically inevitably ripples across borders.
Policy decisions in the U.S. affecting sentiment in Europe, Asia, everywhere.
Right. The tariff debate isn't just local. It's a global conversation about growth and protecting industries in an interconnected world. Multinational companies are recalibrating, balancing global supply chains with localized production.
That careful balancing act is going to be a defining theme.
Undoubtedly. And it's a poignant reminder for investors. Always think globally, even if your portfolio feels locally focused.
That's solid advice. So drawing insights from all this, we're navigating a period of both opportunities and challenges.
Definitely. Moderate gains in the indexes, sector dynamism, it shows the market is robust enough to handle volatility without chaos. It's like the market is saying, yeah, there might be bumps, but the journey is on track.
The journey is still on. Before we wrap up, any expert insights or predictions you want to share?
Looking ahead, I think we'll see more consolidation, especially in sectors like consumer goods and technology. The Skechers story, with its mix of acquisition promise and prior pain, signals a period of realignment.
So watch for similar moves as potential opportunities?
Exactly. They could indicate significant gains medium term. I also foresee companies investing heavily in AI and digital transformation really outpacing their peers.
That seems like a given. The relentless march of technology.
It is. But caution is still key, especially in sectors getting a short-term boost from policy changes. Tariffs might help some companies temporarily, but the long-term winners will invest in sustainable practices and global competitiveness.
Sustainable and globally competitive, those are the watchwords. For our investors listening, any thought-provoking questions to leave them with?
Yes, a few. How will the ongoing debates around tariffs and trade policies shape the performance of the companies in your portfolio? Are you positioned to benefit from these consolidation trends, especially in tech and consumer sectors?
Good questions to ponder.
And maybe most importantly, are you balancing the need for steady, reliable income with the possibility of higher, riskier returns that this dynamic environment offers?
That holistic view. Market trends, sector analysis, global implications, policy versus performance. It's a lot to consider, but crucial for strategy.
It is. It's about seeing the big picture, even when the details seem scattered. Keep your ear to the ground, eye on the horizon, and you'll be better equipped to navigate the challenges and opportunities ahead.
Excellent advice. So to recap today's briefing,
the market's showing modest upsides. Tech is a dominant force, fueled by AI investments. And companies like Skechers are making big strategic pivots due to external pressures like tariffs.
The interplay between global forces and domestic policy is creating a landscape where adaptability and foresight are critical.
Exactly. Whether you're new to investing or seasoned, understanding these dynamics is key to leveraging them.
Well, this conversation has definitely provided some clarity and spark. Thanks for breaking it all down, Host A.
My pleasure, Host B, and thank you to everyone for spending your morning with us. At PantheonAI, we see every piece of info as a tool, and we want to be your information copilot.
Helping you navigate the financial landscape with insight, clarity, and maybe a bit of humor, right?
Precisely. Before we sign off, here's something to mull over. In a world where every headline has layers of complexity, how can you differentiate between short-term noise and long-term value?
That's a great question to end on. I'd be curious to hear thoughts on that. Listeners can reach out to our AI copilot or drop questions on our platform.
Definitely. And remember, there's always more to learn, explore, and discuss. Learning shouldn't feel like a full-time job.
Couldn't agree more. That wraps up our briefing for this morning.
Be sure to join us again tomorrow for another deep dive. Until then, keep your strategies agile, your inquiries thoughtful, and we'll catch you next time.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.